Money with Bob Brooks is sponsored by the Prudent Money Foundation on 91.3.
Well, a big decision by the Fed to not do anything sure did buoy the markets today. David Morgan of the Morgan Report is here to give his take on the latest Fed decision. Stay tuned for Prudent Money. And welcome to the Prudent Money Radio Show. I'm your host, Bob Brooks. Thank you so much for joining me today. I do appreciate it. Well, it was Fed Day today, and there was a lot of expectations that the Fed would announce to what degree that they would start cutting back on all this stimulus. But yet they said, you know what, we're not going to cut back at all. Full steam ahead. And, of course, the markets loved that. But what does that really mean going forward for all markets? Well, precious metals expert David Morgan is here to give us his take. Hey, David, welcome to Prudent Money.
Bob, it's great to be on your show. Thank you.
You know, David, big bull markets like we have in the stock market create, I think they create a lot of complacency. People just kind of assume, well, the market's going to continue to go up. The Fed's going to support it. And I would suggest, investors really need to have an understanding of what is going on. And unfortunately, kind of tough for so many to understand, especially when we're talking about the Fed. So in very basic language, explain the significance of today's Fed meeting.
Okay. I'll try to be as basic as possible.
That's a tall order, I know.
Well, I think the main concepts are fairly simple. One is, I think, taking a historical viewpoint is very easy for most people to understand. And the idea that you can print wealth is wrong. So if you look at a recent example, you could look at Zimbabwe. And Zimbabwe basically went on a dollar that was basically equal to the U.S. dollar, and 18 months later, there were trillion-dollar bills printed, and they had a hyperinflation. The currency was shunned. It didn't work whatsoever. And that was the inability to print wealth. You can print bills with a lot more zeros on them, but that doesn't make you richer. So that same exact premise holds true for the United States. Now, it's more complicated than that because the United States, in an advanced capital market, you have the bond market. And the bond market is a promise to pay something in the future. The problem is that we are so indebted, the entire globe is so indebted, primarily the United States, that these debts will never be paid off at full value. So that the money that you loan today will not be paid off in the future in equal value. And that's a ripoff. That is a lie. That is basically confiscation of wealth. And that's what's taking place. Yet the powers that be pretend as if everything is okay. And this game of pretend continues, and it continues today with Bernanke saying that, one, the unemployment rate is too high and the inflation rate is too low. Therefore, we're going to do nothing. We're going to continue to print money or pretend that we can create wealth by printing it. And, of course, that is a lie.
Well, going into today's Fed meeting, were you surprised at the outcome? I mean, I would have thought they would have done something token at least, but I was a little surprised that it's just nothing at all.
I was awakened this morning before 6 by Bloomberg, and they asked me for my opinion. And I felt that there would probably be a modest tapering, but I said something that, I think I made a good statement, and that is that it will be a monumental change. Monumental not from the amount that they would taper,
right,
but monumental from once they start tapering. What they're saying is that our policies are working, and we don't need to print as much money. And once they said that, they put a stake in the ground, and they're very difficult for them to come back later and say, oh, no, we were wrong. We need to increase the stimulus more. So rather than make that big, line in the sand, so to speak, and make an effort that says, okay, we've got it together, we can taper off, rather than do that, they decided to do nothing. And I think that's very important for people to know. So the markets, especially the metals markets, reacted. Yeah, the Dow's up 150 points, but that's nothing percentage-wise.
Right,
when you look at the metals, gold's up over 4% and silver's up over 6% in a day.
Well, what's interesting to me is how all this ends, because if you look at the reasons that they give for not tapering, for not cutting back, that the unemployment rate's too high, And it's, if you look at what they've done, none of what they're doing is really helping the job market. It's not as if we're going to continue to do this and their unemployment rate's going to come down and everything's going to be okay because we're doing this. And then at some point, if we're already seeing economic weakness and they're cutting their growth forecast, what other bullets in the gun do they have?
Well, they don't. First of all, the idea that the Fed's monetary policy could create jobs is ludicrous. It can't. But yet that's continually what you hear in the mainstream financial press. Secondly, what other tools do they have? Bernanke was asked that question by one of the mainstream financial press. He basically said, we don't. We don't really have that much to do with fiscal policy or anything else. We basically have interest rates and the Fed funds rates. And that's about it, and how much stimulus we can offer, or how much asset buying we can do. So they can buy worthless assets, and they can set the Fed funds rate. And that's really the two tools that they have. So, but regardless of the almighty, all-powerful Fed, their policies are not working. If they were working, you wouldn't need QE2 and QE3.
Right.
You wouldn't need talk of taper. QE1 would have been enough. And in Keynesian economics, the idea that you can print money and stimulate the economy works for a long time. But it quit working at QE1, QE2, QE3, and on. It stopped working. And that's the tipping point. The tipping point means that no matter how much printing you do, it doesn't help anything. In fact, it makes it worse. And we've been there since the 2008 financial crisis.
Well, you know what the most troubling thing about what you just said was that Ben Bernanke said, we really don't have anything else to throw at it. And then the second thing is, well, I guess we'll be depending on the politicians in Washington to fix it. That's not a good answer, is it?
No, it's not. And he did say that. Exactly. You're very astute, and you got a great show, and I'm privileged to be on it. But, I mean, yeah, he said, well, we can't do that much. It's up to Congress to, to do something. Well, Congress doesn't create jobs either. The free market creates jobs. Basically, the government's got to get out of the way, but they keep taking more and more power away from the people. The country was started on God-given, constitutionally secured rights, and the government was at a very minimum so people could do what they did best, and that's prosper. But now everybody's dependent, I should say everyone, excuse me, I'm getting excited, but way too many people are dependent on government, not God, and that's a very big problem.
Yes, it is, David, and it just, I was thinking about this today, just all the irresponsibility. Everything is just so completely out of balance on every single level, and it just continues even at a faster pace today.
I agree, and let me just restate it. Everything is corrupt. The food system's corrupt, the financial system's corrupt, the water supply is corrupt, the politicians are corrupt. Basically, everything is upside down. Every principle that this country stood for is now upside down. I mean, the idea that you should have a God-given right is ridiculous in today's mindset. It's like government gives you rights. No, they don't. Government's restricted by the Constitution, but tell that to an 8th grader that's going through school now, and they'll look at you cross it. They don't have a clue of what you're talking about.
Well, David, I want to give out the website because there's a lot of great information on the website. It's www.silver-investor.com. And what I like about the website, David, is you got a lot of free information on there, and go check that out and get some information on the precious metals market. So let's talk about that. That is your big area of expertise. Let's talk about gold. And, gold and silver had big days today. And like you said, compared to the market, markets looked like nothing compared to what went on with gold. And gold stocks, big day. Talk about this effect going forward on gold.
Well, there's really two theories of money. One is that you have specie money, which is, commodity money or money you can hold in your hand. Gold and silver for 5,000 years have been elected by the people to be money. There is no other currency on the planet that's lasted anything close to that amount of time. So every fiat money or paper money or non-backed money has failed, every single one of them. So that gives you the basic outline of the fact that all paper monies fail. Now, the U.S. dollar hasn't failed yet, but basis the 1913 founding of the Fed, when a dollar equaled 100 cents, is now worth about 3.5. So if you have 3.5 if you have 4 out of 100, you've got a failure on a quiz. And that's basically where the dollar stands right now. Having said that, the dollar is like the best, worst thing out there, because most currencies against the dollar are not as good. But where we're going is we're going toward the truth. And the truth is that all these fiat systems have very bad repercussions. An economy that's failing will continue to fail. There may be some bright spots here and there, but the overall basis of running a system that's based on a lie that you can print wealth will not succeed. And that's where we're at, and that's what these governments are trying to do. And because of that fact, people need to understand that. And the best protection is to get in an asset class that's been money for 5,000 years that's outside the financial mainstream. Gold and silver that you hold in your hand are exempt from any bank failure, any counterparty risk, any financial policy blow-up, anything like that. It's real money that's been real money for thousands of years. It's trusted by everyone. It's available and secure anywhere in the world, and this is where you're going to see a big financial shift as these metals and more people wake up to the fact that the metals are outside of the financial system.
David, we have about 30 seconds before a break. Let me ask you this, and then we'll cover the remainder afterwards. What do you see going forward for the price of gold, and do you think that this decline we've been through, do you think it's over with?
Yes, I think the decline is over with. I do see the price going higher, but it's going to take some time to back and fill and work its way back up to the previous high of $1,900 gold and $48 silver, but that will take place.
This is Bob Brooks. You are listening to the Prudent Money Radio Show. Thank you so much for joining me today. My special guest is David Morgan, and David is a precious metals expert and author of the Morgan Report. You can get more information on David and some of his writing at www.silver-investor.com. One of the things that David and I have been talking about, if you're just joining us, is really the big non-decision today of the Fed. And we'll get on the other side of the break. We'll talk about what this really looks like going forward. Are we getting a little bit closer to an end game? What's that look like? And what is it? Is it safe to think, well, this is just great for the markets, and the markets are going to continue to go up, and everything's okay. We have nothing to worry about. Don't think it's that easy. But stick around with us. More with David Morgan on the other side of the break. Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. I do appreciate it. We're real fortunate to have David Morgan with us today on a Fed day and giving some immediate analysis and reaction to what they didn't do, just more of the same. And talking about what this really has an effect going forward. There's a couple things I want to talk about, David. First of all, you spoke of the lie, and I think that you put it perfectly there of what's going on here. There's always the thought that, well, this can go on much longer than anybody can ever imagine. And what is your take on, at some point these imbalances have to right themselves and things come back into balance. So, do you feel like we're staring over that edge of the cliff, or do you think this goes on just a lot longer and surprises people?
Well, great question. I'll have to preface it with the comment that I don't know. But let me say that I study monetary history as well as a lot of people. And I think you can see the edge from here. And the problem is it's so unpredictable, because what could happen is some event, a black swan event, if you will, that takes place. For a quick example, the bond market we talked about. This is the debt market. You will never be able to pay this money off in any meaningful way. You might get paid off, but the purchasing power of the dollars that you paid back in are so insignificant that you're going to have a currency crisis. That's how these end. So what could happen is a bond trader in, let's say, China or Japan or somewhere decides to sell some U.S. bonds, and it's above their normal amount by, let's say, 30, 40, 50%. Another bond trader, since these guys are all interconnected, sees that and says, geez, I don't know what that Japanese bond trader knows that I don't know, but I'm getting scared. Maybe I should start selling some more U.S. debt as well. So all of a sudden, then somebody in Europe sees that and says, China and Japan are getting out of the U.S. dollar. I better get on board. So now you see where I'm going with this. Mm-hmm. All of a sudden, you've got kind of a feeding frenzy to the downside. Now, that's just one example of several I could think up. Am I predicting that? No. What I am suggesting is that these things can get out of control rather quickly. And even though there's these circuit breakers and all these things in place that can stop the markets, halt them, freeze them, make them stop, there's a certain mindset that once it takes place, it's hard to overcome. It's like a flock of birds flying. All of a sudden, the lead bird changes directions rapidly, and they all follow. It's that kind of herd mentality that we're going up against. So once someone decides that, you know what, I've had enough of these dollars, I'm not going to buy anymore, something drastic could happen. It doesn't have to be individuals. It doesn't have to be a nation state. It could be either one. It could be something in between. But once it takes place, that tipping point is reached, then the psychology changes. Because once everyone can see the emperor has no clothes and admits it, that's when everything changes, and you can't stop it once that takes place.
Boy, so true. And you know what's interesting to me about this, David, is that there's so many words you can put out there. The psychology is a big word, and in confidence. Fed credibility. They've got none at this point. I don't see how anybody could give them credibility as to what they're doing. And, you know, what would be interesting is something as small as the bond market's not paying attention to any of this and interest rates continuing to rise. I think that would be a major, and I think that's what you were alluding to, would be a major fly in the ointment of with the unintended consequences. What about, though, with the markets in general? I guess you could, and you might have answered globally answered this what you just said, but you know, with the markets in general, I think that the biggest risk that we have right now, of course, is that unknown that you didn't see coming. Lots of imbalances, and I think the thing to stress is that with the sheer number of imbalances that are out there, it makes it a very risky environment. And I'm just concerned that investors don't see that because the complacency.
I agree. I've done several lectures around the world on not only on the metals but the economic picture. And one that I did not too long ago, a year or two ago, was comparing the Weimar Republic to the United States, and I compared it in fiscal policy, monetary policy, stock markets, gold and silver, and that type of thing. And basically all the charts pretty much laid over each other. In other words, there was a big acceleration in the amount of money printing that took place. The stock market started to move up significantly and all these things. The one thing that was a huge difference and made all the difference is that the velocity of money was below 1 in the U.S., in the United States. And what that means is that it's not a function of how much money's been printed. And that's something that you hear over and over again, especially in probably the hard money outfits like myself, that look at all this money printing. But really it's borrowing. Secondly, it's not a function of how much money they have in the system. It's a function of how fast it's spent. So in other words, these trillions of dollars that have been created and sent into the banking system have just sat there. You can think of them as sitting in the vault. They really don't make physical banknotes. They're digits on a computer. But nonetheless, they're just sitting there doing nothing. So you can create all kinds of quote-unquote money that sits there and does nothing. It's only when that money starts to move or gets scared where you have a problem. 2 more points. In the Weimar Republic, the stock market went up significantly during the currency crisis, but not enough to make people whole. In other words, even though the stock prices kept going up and many people thought they were doing okay, in reality they weren't, because the only thing that actually held up during that currency crisis was gold and silver. And silver actually had a blip at the end. And I'll be honest about this, even though I'm more of a silver bug than a gold bug, and I like them both. And that is that some of the people that wanted to leave cashed out their silver for gold because it's a lot less bulky relative to the difference in price, and were able to move across the border with their assets pretty much intact.
I saw also on your website, and I was interested in this, that you were doing some Martin Armstrong analysis, which I'm sure most people that are listening to this right now are going, who's this guy, Martin Armstrong? A fascinating story about that guy. I think listeners should go check it out. But what is you were doing some cycle work, looking at and analyzing his work. What did that say about gold?
Well, to me, it says it's on track. I mean, if you go back and look at the last bull market in gold, and I lived through it, I'm old enough to know that, And we had this great move in gold when it went from a fixed price of $35 an ounce to $200 an ounce, and then it went down to $100. And then it finally got back up to $200. And once it made the previous highs, it went from $200 to $100 to $200. It took about 4 years for that round trip, $200 to $100 to come back to $200. Most people that got in at near the top, near the $200, and it got back to that level thought, that was it as a double top. No, it went from there, and it went up fourfold from there in a matter of just a few months. And that's the type of move I think we're going to see. So Martin's work suggests a certain date and time for the gold market to really accelerate, and it's very much in line with my thinking that this market's going to back and fill and move higher from here, but it's not going to get into the acceleration phase until we get above the probably $2,000 level for gold and $50 level for silver, and that's not going to be next week. It's probably going to be sometime in 2014 or 15. Mm-hmm. But more and more people are waking up to the truth. As this all takes place, more and more people will be protecting themselves by selling off some assets and moving into the metals. The problem that exists is that they're called precious for a reason, and that is there isn't very much of them. And because of that fact, and there's so much paper money out there, to put a paper price on what an ounce of gold is worth is almost a moot exercise, because in reality you can't do it. When you compare the amount of paper that can be created, which is infinite, versus a finite resource like gold, if you do, zero in the denominator, you get infinity as the result. So nonetheless, the price will be far higher, and I don't try to concentrate on the paper price of gold. What I try to concentrate on is how much it will protect you in the future and what it will buy in the future.
Well, David, great information, and I certainly it's a pleasure to have you on the program, especially on Fed Day, and give us some feedback. Once again, David is author of the Morgan Report, and you can get more information at www.silver-investor.com. Hey, David, thanks for coming on today.
Bob, my pleasure. Thank you.
This is Bob Brooks. You are listening to the Prudent Money Radio Show. Hey, listen, if you've got a question for me, go to the website, www.prudentmoney.com. And send it in. I will get that answered for you. It's really interesting, and I've had a lot of guests on the program talking about these exact same subjects, and it's interesting to me how it's like there's no in the middle on this. You're either on one side or the other side of the argument of how this turns out. I think that the picture it paints is that the irresponsibility that continues through the Federal Reserve Board, through fiscal policy in Washington, as this continues, it creates a lot of different types of events that could happen going forward. And but here's the thing. I want to end with this. It's all noise. And I say that because of the fact that what it really comes down to is what our personal responsibility is as Christians is to be the best steward of what God has given us to manage, to be stewards over. And that's really got to be the focus, because you can get wrapped up in this is going to happen, that's going to happen. What you need to be wrapped up in is stewardship in your relationship with Christ, and to make sure that you're doing the right things from a stewardship standpoint. Focusing on that, focus on that, and then all this noise will still be there. And besides, that's where we get our hope. That's where we get our confidence, and that's where the focus is. So always keep that in mind, because I do think we're in very risky times, and I know I've been talking about that, saying that the market's been continuing to go up. I've been wrong. At the same time, I still think that you got to have some to look ahead and say, okay, this is the picture that's being painted, and this needs to affect some of my decision making. This is Bob Brooks. You have been listening to the Prudent Money Radio Show. Go to the website www.prudentmoney.com. We are all out of time. Until we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.